What's up? Good morning. Oh, hold on. I think it's gonna be some sunshine. Let's put it over here. Let's put it over here. I think this is a lot better. Get that movie pose like. Anywho, happy Friday. This morning I'm gonna read about bookkeeping. I haven't read this part, so it's gonna be new to me and some of y'all. Gosh, man, it's the weekend, yo. I can't wait. I can't wait. I can't wait. This next part of the information may be a little difficult to understand. When any business is being run, the accounts are recorded as money coming in and money going out. For a bank, the money coming in is called a credit, and the money going out is called a debit. The objective is to have these two accounts always match each other. Other balances for any customers. Not everything done in banking is immediately obvious to the average person. So it may be a little difficult to understand how everything works in this area. If you have an account with your bank and you deposit $200 to open the account, the bank enters that in its books as a credit. The credit on your account is $200 and the debit is zero. So the balance has a positive or credit value of $200. Yeah, I'm definitely going to read that over again because that just threw me. If you are able to withdraw $300, then the bank would record this as a debit of $300. When the credit balance on your account is $200, the balance on your account would be 100 in debt. That is overdrawn by $100. Yeah, I'm definitely going to read this again on my own for sure. But I'm just going to put this out there. As far as the accounting goes, your account is balanced and the book is satisfied with the state of affairs. $300 come in and $300 going out. The book's balance, case closed. Now, if you were able to apply for a loan, mortgage, or otherwise for 100,000 from the bank, they would give you an application form which is set out in such a way that you have to fill in the straw man's name rather than your own. Separate boxes with one of them containing Mr. And they may even require you to fill the form in using block capital letters. Isn't that something? I never peeped that. You may think that the capital letters are so that it can read your writing or perhaps to make it easier for you to enter into a computer, but the name in those capital letters belong to the straw man, not you. I didn't know that. I don't know about y'all, but I didn't know that. I always wondered why it had to be in all caps. You have actually just made an application on behalf of the straw man and not on behalf of yourself. You might wonder, why would you want to do this? After all, what could they get from the straw man? Well, you might be surprised. When the straw man was incorporated, they assigned a large monetary value to it, possibly $100 million, and they have been trading on the stock market on behalf of the straw man ever since. And you know how many years that has been? So very surprisingly, in their opinion, the little fellow is rich, really very rich, and you have just authorized them to take the amount of your loan application from the straw man's account. So before the bank passes you any money, it has already gotten his money from the straw man account and entered it into his books as 100,000 credit to your loan account. Then place 100,000 into your loan account as a debit. Interestingly, the loan account is now balanced and could easily be closed off as a complete deal. Yeah, y'all gonna have to read that on your own because I'm confused too, but we're gonna keep moving. This is where the sneaky part comes in. To get the money out of your account, you have to write and sign a check for 100,000 on that account. What does the bank do with the checks you sign? It assigns them to account on the asset of the bank. Suddenly, the bank is ahead of $100,000 because the check is in the name of the straw man who can supply the bank with almost any amount of money, but it does it in there. The bank with almost any amount of money, but it doesn't. Oh, hold up. Okay. That you know so little about what's going on with the pay and anything up to 100,000 over the years against you, but you believe you owe them. If that happens, then they have yet another 100,000 from the bank. To make things even better for them, they want you to pay them interest on the money which you don't actually owe them, because we talked about that last time. Overall, they'll make a great deal of money when you borrow from them. So perhaps you can see now why banks make hundreds of millions of dollars in profit each year. If the loan were used to buy property, then the bank probably insisted that you assign the title deed to them as collateral for the loan. As soon as the property deal closed was completed, if you then failed to keep paying them, they are likely to attempt to foreclose on the loan and sell your property quickly for an even greater profit. Man, they making so much money off of us. This is. And to add insult to injury, if the property sale did not exceed the amount of the loan plus the charges for selling it, then they are likely to claim that you owe them the difference. Boy, man, they in the pockets. Perhaps you can see why Jerome Daly told them to go take a running jump at themselves and why you request for the accounting for any loan made to you puts the bank in an impossible situation. If the bank then writes and tells you that the debt is fully discharged, they still have a they still have made a massive profit on the operation. And they also hope that the mass the vast majority of their customers would not catch on to the fact that they are paying too much for their property, or even there is a straw man involved. I think we've been knew that we've been paying too much for our property. I don't know about y'all. Please don't feel that you're ripping off the banks if you don't pay them what they are asking you to pay. They have already recovered everything paid out before you start paying them for the second or third time. When is a mortgage When it is a mortgage, the entire process is very much the same. The debt the debt-free sovereign website. Oh, they got a website, y'all. It's www.freewebs.com /debit free sovereign. Gives you a very clear description of this process in Canada. The process is much the same everywhere else. They describe a typical property sale and mortgage this way. The buyer goes to Magic Bank in response to the bank's claim that it is in the business of lending money in accordance with corporate charter. The buyer went to the bank believing that Magic Bank had the asset, which is money, to lend. Magic Bank never tells its customers the truth that it does not have any money to lend, nor that Magic Bank is not permitted to use their depositors' money to lend to its borrowers. Wow. Notwithstanding the fact that Magic Bank does not have any money to lend, Magic Bank makes the buyer sign a mortgage loan application form, which is essentially a permission, not saying the borrower slash buyer promises to pay Magic Bank for the money, what money, which is supposed to be received from the bank even before any value or consideration is received by the bank slash borrower from Magic Bank. Now I'm definitely going to read that part over because I'm confused. Here we go. Notwithstanding the fact that Magic Bank does not have any money to lend, Magic Bank makes the borrower slash buyer sign a mortgage loan application, which is essentially a promissory note saying that the borrower slash buyer promised to pay the bank for the money. But what money? Which is supposed to receive from the bank even before any value or consideration is received by the borrower slash buyer from Magic Bank. This promissory note is a valuable consideration, a receivable, and therefore an asset transformed from the buyer to the bank, which Magic Bank enters into its own asset account as a cash deposit. After making sure the buyer has the ability to pay the required monthly payments, the buyer has credit. Magic Banks agrees to lend to the buyer the money cash to the pay the seller. Magic Bank has no money to lend, but he gave the buyer a promise to lend money by way of commitment letter, loan approval letter. I know a thing or two about that. Loan authorization or loan confirmation letter signed by a bank official or loan mortgage officer employed by Magic Bank. Definitely know a thing or two about those. Magic Bank acceptance of the buyer's promissory note makes the bank liable to the buyer slash borrower for full face value of the promissory note, which is the agreed purchase price of the property, less any cash deposit or down payment money paid by the borrower directly to the seller. It is important to note that at this point, that all real estate transactions require that the property being sold must be conveyed by the seller to the buyer, free of all liens or encumbrance, which means that all liens, such as existing mortgages, judgments, must be paid before the property can be mortgaged by the buyer as collateral to the mortgage loan, which is yet to be received by the buyer pursuant to the promise made by Magic Bank. How can the seller pay off the mortgage and obtain clear title if he has not yet received any money from the buyer? Gosh, this is tongue tangling for me. And how can the buyer mortgage a property and does not yet belong to him? That is true. How can you do that? The dilemma is solved using Magic Bank's magic bags of tricks. Magic Bank, in concert with the bank's lawyers, notaries, causes all the lien encumbrances to magically disappear by writing Magic Bank a check. I swear I feel like the same vehicles just keep coming by. Backed by the buyer's promissory note, an agreement of purchase and sale deposited into the lawyer's trust account to pay the sellers for the property at closing. In essence, using the buyer's promissory note as the cash to enable agreement of purchase and sale. So the buyer's promissory note made the conveyance possible. Magic Bank caused the property to be conveyed from the seller to the buyer with the title free and clear of all encumbrances and liens. The property now belongs to the buyer, which makes it possible for the buyer to mortgage his property to Magic Bank. The buyer actually paid for the property using his own promissory note. Wow. At this point, the seller has not yet received any money or cash, so Magic Bank and its magicians must perform more magic in order to satisfy the seller's requirement that he get paid. Or the whole deal is null and void. The seller does not even know that the property has been magically conveyed to the buyer's name in order for the seller to receive any money. The issuing magic trick is accomplished this way. The buyer is made to sign another promissory note. The mortgage contract is attached to the promissory note, which makes the buyer liable to pay Magic Bank for the money or the loan, which the buyer has not yet or may never receive for up to 25 years or more, depending on the term of the mortgage contract. Wow, that's a cold game, boy. This note is linked to the collateral through the mortgage contract, and as such, it is valuable to Magic Bank. Yo, this is crazy. Magic Bank then goes to Federal Bank or to another bank to pledge the deal they have just gotten from the buyer for credit. The Federal Reserve Bank then gives Magic Bank the credit. Remember, it is not Magic Bank's credit, it is the buyer's credit who promised to make Magic Bank if and when the money is received by the buyer from Magic Bank payable for up to 25 years or more. Hold on. So Magic Bank goes to the Federal Reserve to get money from them, and meanwhile, we up here paying for 25 years. Man, that's cold. What happened above all, what happened above is basically a swap transaction. All banks do to monetize security. In this case, the second promissory note that is linked to the mortgage contract and signed by the buyer is a mortgage-backed security. Magic Bank will then agree to pay Federal Reserve Bank certain percentage of interest over prime. Thus, the buyer's loan package goes to the Federal Reserve Bank, which credits Magic Bank with the full amount of credit, which is the total amount of the money Magic Bank is entitled to receive after 25 years, which is the amount of the principal plus all the interest payments the buyer has promised to pay Magic Bank for 25 years or more, which is usually 3 times the amount of the money promised by Magic Bank to the buyer. By Magic Bank just enriched itself and got paid in advance without using risk of its own or money. Wow. Magic Bank's magician, the lawyer who holds the check that is backed by the buyer's original promissory note, then writes a check to the seller as payment for the property. In effect, the buyer paid the seller with his own money by virtues of the fact that it was the buyer's own money, promissory note. Got to think that good old Richmond International Airport, y'all. Gotta love that. Okay, where was I? All right. Magic's bank magician, the lawyer who holds the check that is backed by the buyer's original promissory notes, then writes a check to the seller as payment for the property. In effect, the buyer paid the seller with his own money by virtue of the fact that it was the buyer's own money, the promissory note that made the purchase and sale possible. Magic Bank just made a cool 300% profit without using or risking any capital of its own. Listen, we gotta stay informed, yo. If you're not informed, then they are pulling the wool over our eyes every single day. There's more in this chapter, but I ain't gonna bore you with my reading. I'll let y'all finish that up. But I hope y'all have a good Friday. And yeah, be easy.